The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, after it was all said and done in the market trade on Thursday, we really kind of fell apart as we went through the session. Pretty big reversal in beans, especially front month contracts, well off of session highs. We did find a little support in spring wheat thanks to some of that variability found on the spring wheat tour, it sounds like. But overall, kind of a down day when it was all said and done. Let's talk about it. Let's try to make sense of it all. Joining us here on the show, our good friend Bryan Doherty with Total Farm Marketing. Bryan, great to catch up with you again here this week. And yeah, it really just felt like some of that early buying just kind of faded as we went through the day. I guess we didn't feed the bull enough on Thursday.
Yeah, and that's just it, Jess. You know, at some point you've got to continue to put some reason for people to buy in front of the market. And while export sales weren't disastrous, that's that swing vote I've always talked about with export sales. That wasn't there today. Interestingly, it looked like there was a private sale again of beans, so we're starting to see some bean activity, but beans had a good morning going and kind of tripped over. Didn't really care for the close under 14 in November. Took us a long time to get there. We're trying to get through it. Pretty good morning in November beans going to high of 14.32, close at 14.98. Yikes. I don't want to read too much into any one day, but not a healthy looking day in the November bean chart. A big bearish key reversal there. Wheat down as well. Some pretty solid gains early on in the session. You're talking something like September Chicago. Yesterday closed right around that, just under 720. Had a high of 740 today, and yet lose 7.25. So really weak, sluggish close. D's corn down 6. Weather, you can find what you want in the forecast, I guess. But it does look like there's chances of rain that are improving. 6 to 10 days showed us that. With this heat, though, there's a lot of people that need rain. Not a forecast, need rain.
That's a great point. I'm starting to hear more and more and seeing more and more on social media, and, take social media for what it is, but pictures and anecdotes from across the Corn Belt, folks saying 95, 100-degree temps, 20-mile-an-hour winds, we're done for. And that's what I'm starting to see more and more. Are you hearing some of that in your conversations, Bryan?
I'm not hearing this so much we're done for, but this is going to take its toll, is what I hear. Or this is going to hurt. This is going to remove bushels. This takes the top end off, or whatever. But whatever adjectives you want to use, it's kind of a theme that has sort of prevailed, and it just boils down to this year. It's July 27. What hot temperatures are in July? That's called summer. But when you have extended dryness and the rains have been timely in fashion, hot weather gets magnified as the need for big moisture to fill ears and plants and pods starts to loom large. So I'm not saying this is a train wreck, but it's going to take some really good moisture, and you can't help but think that July is going to be one of those odd months that early in July it looked like we got some rescue to the crop and things are moving along. Mid-July kind of up in the air. Late July, I'd say the crop's starting to go backwards again. And it was just as surprising as last week we didn't see an improvement in the bean crop ratings on Monday for the previous week. So hard to imagine we're going to see better crop ratings this week when most of the Midwest has stayed hot and dry.
Very true. Well, you mentioned that flash sale of beans in the morning wire to unknown destinations. A couple days here now where we've gotten those sales, and one has to assume it's China stepping in here to buy. That's usually what it is when we see unknown destinations. Not always, but typically. You mentioned export sales were okay, but we know this overall demand picture for U.S. commodities is pretty sluggish. So you look at a key bearish reversal there. You mentioned in November beans, seeing a little bit of export demand pick up here this week. I mean, if we found some demand, could that maybe help support this soybean complex a little bit more here, Bryan? What do you think?
Well, remember, we've talked about this before. The soybean complexes of the three has potential. So I want to be careful with that, that we don't overrate potential.
Yeah.
But good gravy, 52 bushels an acre yield. That's an all-time high with the kind of weather that the bean crop has experienced this year. It's going to take a really good here last few days in July and good August to sort of pull a rabbit out of the hat there and say, okay, yeah, this crop, it suffered through dry and heat and is doing well. Last month, again, well, I should say this month's supply and demand report last month is really challenged when you cut carryout or expected to cut carryout to 200 million bushels and it comes in at 300 million. That's a big, and despite 4 million acre increase. So you really had to look at those line items and shuffle kind of hard to see, can we keep carryout at a high enough level to keep the market from actually running away to the top side? And that's what's happened. But boy, this weather is ultra critical. So not a very good looking chart today. Don't want to read too much into any one day.
Yeah.
But it seemed like, it was more of a risk on day rather than risk off. The Brazilian real continues to decline. That's not necessarily a great thing. And the dollar was up pretty sharply today, up 85 hundredths of a point. Pretty big bullish key reversal on that chart. Just bullish key reversal just means the range was bigger than the previous day, and it looks like that's going to close higher. So the dollar's on the move up, commodities on the move down today.
Overall, we think about the recent rally, the volatility we've had here the last week or so, some of it tied as well to what's going on with Russia, Ukraine, Russia bombing the Ukraine export infrastructure. So that's been a driver here on top of weather and other things. But, overall, the rally, corn, beans especially, it feels like it's at least given farmers another opportunity to make some sales if they needed to get caught up here, Bryan.
Well, we might have talked about this, but I've talked to lots and lots and lots of farmers about this. So if I said, hey, last October, we're trading around 625, 637 was the high on these corn. If we fast forward to end of July, you've got 94 million acres of corn. You've got Brazil with what is called a gigantic crop, and you've got poor exports. 575, 550 would probably be a price that would make good sense. You'd say, well, geez, I don't know if we'll be at 6.25, but maybe 550. I think anybody with analytics would say that probably makes, and that's where we are. The question is, where do we go from here? So we got these competing forces of weather and trying to figure out a crop size versus a demand market, which is weak right now. Mm-hmm. Perception of big supply out of South America. Stressed relations with China. The war, who knows? It'll be less out of Ukraine, but European countries say they'll help export through their countries. Lots of stuff. So yeah, farmers selling should have and likely picked up toward the, if you've got a good looking crop and all of a sudden the board's at 565, 570, we've argued this before, 25% reduction in value off the high after January 1st for December corn futures historically, when I say historically, 2014 through 2022, 25% every year we've lost somewhere along the way. And that's about a 472. So when you're looking at a market that could be a full dollar above that, it's not surprising that we're seeing farmers say, I better get some things sold. This picture looks a little bleak on the demand side.
And I know it's a case of risk management. If you don't have a great looking crop, you have, obviously, we've touched on this many times, Bryan, the tools in the toolbox to still get something done depending on how your crop looks, Bryan.
Just be aware of all your tools. There's a lot of great contract types out there. So for instance, I could tell you got a hedge to rye. Well, you don't have to lock the base. The base isn't good right now, but it gets you sale price. Hedge futures, buy puts, sell a call. Multiple things that you could look at. Be versed in those, but you don't have to be an expert at it, but talk to somebody who is and help them to guide you down the path to make a good decision on that. My concern is that there are too many farmers right or wrong, that are complacent now just because they are. It's just the nature of where we're priced. It's not a no-brainer. It's not easy. Don't know what you're going to have. And that ultimately, where the majority of farmers usually kind of rest, is where most of them get beat up. So I've always argued that what works against most farmers, well, that'd be lower prices, and that concerns me, that we run out of steam so quickly this week on just this kind of what I always call brutal weather if you're outside.
We're having a conversation today with Bryan Doherty with Total Farm Marketing. Bryan, let's talk protein sector, livestock, cattle, hogs, dairy here. Let's start with cattle first. And a fairly quiet, mixed day Thursday. Still waiting on a lot of that cash cattle activity to develop here this week, it looks like, Bryan.
It's kind of surprising that we are, right. And so we're waiting on that. And then I think we need to be respectful of August live cattle. We're approaching August, but I just going to move this here, a really big bearish key reversal 6 sessions ago. And the market has just kind of went flat to lower since. I'm concerned that those deferred months are pricing themselves out of a demand market. And then when you get a nice reversal on the charts, something to consider. 2 days ago in the 3 days ago in the April contract, we reversed back up, but didn't follow through. 2 days ago, and then we were down again yesterday, a little bit higher today. Just not seeing that follow through. I'm a little bit worried that you're going to have a tough time finding new buyers at new high prices. And so if I'm in the cattle business, I'm certainly preparing to be defensive. It took a long time for this trend to move higher. It won't take long for it to lose half of its gains. That's the nature of commodity markets. It takes them a long time to get a move, and it takes them very little time to lose half of that. So if it takes 6 months to go up, a lot of times it's 6 weeks to go half down. So just keep that in mind.
Definitely. Hog market too, kind of same boat here this week. Just feels very quiet and choppy. I know, that August contract still holding up here, 100, 101, 102.
Yeah.
Yeah. But, you look out to the deferreds, 83 in October, 75 in December, but it just feels like hogs too, just kind of quiet here this week.
Things are kind of flipped. This index price forever was way under the futures. And all of a sudden you look at the hog index and it's 105.79. So it's above all of the futures contracts right now. So you got 102.02 in the August today on the close. So it gives me pause to say, I'm going to say almost the opposite of cattle. When I look at December hogs at 75.80, I see where the index is right now. I'm not in a rush to hedge those hogs. Things can always get cheaper, but you know what? Things can get worth a lot more too. And we got a nice big, what I call inverted head and shoulders forming on those back months in hogs. That points to higher. I'm going to be very selective hedging in here. And it's something like the fourth quarter, probably wait until we get, or at least the goal would be to wait until we get to the $84, $85 mark before taking up the hedging mantle at that point.
Very, very true. I got to ask you, the dairy market, I know we've seen a little bit of a flip here in recent weeks with some of these contracts here, whether they're talking milk or cheese or whatnot. What's your assessment of what's going on with this dairy market right now?
Well, you had better butter prices reaching their highest point this year. So you got some good demand in the butter sector. That had been kind of a, tough market. Cheese prices in general have picked up. We're starting to see demand respond to lower prices. And then the board price started to pick up as well. Part of this push higher in dairy prices here this past week. Now, we've given some ground back the last few sessions. This forecast, not only for the Midwest, but when you get down like in the Southwest and the South, it's not just that it's hot. That's summer, right? But it's prolonged hot. It's prolonged heat. It's something that's lasting days and days and days, or weeks and weeks and weeks. Ultimately, that does seem to should have impact on production. You're talking about a living thing that has to max produce. You don't max produce when it's 100 degrees out or 105. You need good cross ventilation and whatever else, but the cows have to adjust to that, and usually the adjustment is just less milk.
Yeah, a lot of things to watch there, and if that adjustment is less milk, I'll be interested to see how this market continues on here through the summer. And to your point, if we have that prolonged heat, that could be a very big impact here, I think, with dairy producers across the country, Bryan, for sure. wrap it up today. Final thoughts? Anything else you want to share or reiterate with us here today?
Well, yeah, I'm going to step back, look at the kind of the global aspect of things, and kind of look at high fly things. But you look at, there's still, we saw an interest rate hike yesterday.
Yep.
It's going to cost more to borrow money to store grain, to buy inputs on loans. So things are, more expensive. Keep that in mind. When I say keep that in mind, get your price orders out there. I call them your wish orders, that if the market hits certain levels, let them get tripped up and get sold. For instance, in late June, we had several people say, if I could only see a 6 in front of this thing again, I'd sell. And they did. They put orders out there. Now, when they were selling, they weren't sure. But look how fast it fell off of $6. So we've got a crop coming. It's just we don't know how much. And we've got crop left over from last year. And we've got a slow export pace. So for the row crop farmer, I empathize and sympathize both with these high temperatures, especially if you're in a low moisture area. But if you're in an area that's your crop actually looks pretty good, we've got above normal rainfall in most of the Midwest forecasted. If we can get any kind of price rally out of this weather events over the next 30 days, make sure you sell some into that. The world has got will have ample inventory, and yet we don't have this undercurrent of demand that we had, just a couple of years ago, where everybody's scrambling to own something. Countries are buying only as needed.
Bryan, great thoughts. If folks want to reach out to you there at Total Farm Marketing, a phone call, online, I know a lot of ways to get in touch, isn't there, Bryan?
There is. Phone call 800-334-9779. Would love to hear you. And then we can go to email, Bryan with a Y, at totalfarmmarketing.com. Throw your questions at me there, or comments, or constructive criticism, or whatever you think, or just take a look at our website. Some really good stuff there to work with as well. Totalfarmmarketing.com.
Fantastic. Bryan Doherty with Total Farm Marketing. Always great to talk with you, sir. Have an awesome weekend. We'll talk to you next week.
Okay, Jesse. Thank you. Appreciate you, and you have a good weekend yourself.
Thank you very much. That's going to do it for the show today here. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.